Good morning. Welcome to Forex In Four. Today's Tuesday, October 25th, 2011. All right, we're talking about the euro yet again. All right, tomorrow is the big day that we're looking at, and we're going to have to see exactly what comes out of this whole quote resolution to the debt crisis. We know that that they've got a lot of options on the table. A couple of them are expansion of the EFSF. All right, making Greek bondholders take a haircut in the neighborhood of about 50 to 60% on a voluntary basis, so as not to incur default. Although, I don't know how voluntary that's going to be, but it appears to be a question of semantics at this point. All right, they're also talking about recapitalizing the banks, all these other things going on. So right now we're really in just a little bit of a holding pattern. We started that holding pattern yesterday, but that holding pattern yesterday really turned into some major risk appetite in the marketplace. And it's interesting, but you think about what's going on over in Europe, and it's not like this is unknown to the markets yet. People are buying on the way up in the anticipation and the hope that this is going to be the final answer. But I think sometimes the devil's in the details, and what they actually come out with. The market may be a little bit wishing or just be careful what they wish for. So we saw some good risk appetite yesterday. Okay, we got up just underneath this 140 level, all right, and the 140 level is sitting just above the R2 area of daily pivot support. All right, I can see that between now and then. I think we're going to see a spike up here past this R2 resistance area up to just about 140, say 75, 80, something like that. But I think if you keep that R3 resistance area as your stop area, you might be all right. So we'll come back to the euro in a second. German consumer confidence came in better than expected, and Italian retail sales fell. They fell, but not as bad as expected. So it was 0.3% versus 2.3% of a fall. So I guess that's a decent thing. All right, let's just take a quick peek at some other things here. We've got show you the Kiwi. All right, the New Zealand dollar. Whoops, this is a spaghetti chart here from yesterday. You can see right here we're on the 5-minute chart, but this little major push down right here was the CPI report in New Zealand. All right, the quarterly CPI came in at 0.4% when they were expecting 0.7%, and that pushed the year-over-year number down to 4.6% versus an expected 4.9%. So that means that inflation is lower than they're expecting in New Zealand. And why is this important? Well, because there was some sort of expectation that perhaps the RBNZ would raise interest rates, right? Because they had to cut interest rates due to the earthquakes that they had to try and be more accommodative, right? And now it looks like that they may be, able to sit on hold for a while because of inflation that's lower than expected. So you can see that little sell-off there, and we've sort of continued through. But we're just sitting, between the pivot and the S1 daily support here, so not that big of a move. All right, let's look at dollar CAD. I want to show you that. All right, we're sitting just right about at parity. It looks like we may have made a little push through right there just as we're speaking. Yep, sure did. Okay, so I'm going to push it back to the 5-minute show you. Okay, we just breached parity, which was just about the S1 here, pivot support. We also have Fibonacci going. I'm just going to back this out a little bit. This is also going to look like a spaghetti chart, but I got to tell you, I've been running a lot of these spaghetti charts lately. All right, I'm showing a 50% retracement here at around 99.90. All right, for dollar CAD. Now we're going to get the Bank of Canada's interest rate decision a little bit later this morning. All right, we're also going to see their retail sales figures, but there's no expectation that they're going to raise rates. Perhaps they may be hawkish. All right, but what we've been seeing is some dollar weakness across the board, and I'll get to that in a minute. But just to keep a focus on Canada, we've also seen oil prices surging. Okay, you can look at oil here. All right, we're back up to this 93 level, and Canada experiences a pretty high correlation with oil. The Canadian dollar does, so that's also another reason that we've been seeing Canadian dollar strength. Just go back, show you gold. Gold's pushing up a little bit, getting back up to that 1660 level. All right, I'm looking for that other breakdown. We had identified this bear flag here, and as long as we hold 1700, I'm still thinking that this is going to be a down move here, but we could see a spike up before a move down. So that's really what I'm seeing in the markets here, and the action has to do with the dollar. Now recently, everybody wants to think that the euro is driving what's going on in the dollar, or I'm sorry, what's going on in global currency markets with G20s, but really it's the dollar, right? There's more hinting that there could be QE3 on the table. So if people think QE3 is on the table, then it's game on again for equities, commodities, and everything else. All right, we got the better than expected Chinese PMI yesterday, which has helped push commodity prices higher. All right, and then you got the correlations. All right, S&P 500, we've seen good earnings come in from U.S. corporations. So, you got a story here that shows growth in the markets, which shows a little bit of inflation, which means markets can go higher. But you look at some of these individual currencies and you think, gosh, with the correlations, it's really kind of silly. Now, I think that, the only one that really jumps out at me is euro here. I just can't see buying euro at these levels despite having weak dollars, and euro is known as the anti-dollar, so it's going to get a lot of that sentiment. And, a lot of times the correlations just take over and people say, all right, I'm buying euro. I mean, if you look at Aussie dollar, Aussie would be a much better place to be because, at least you get the positive interest carry. Right, it looks like maybe we're putting in just a little bit of a double top here at 105 on the 30-minute chart. Not a big deal here. All right, but I can see the following action taking place. I could see, boom, the move going higher today. We sit around sort of a little bit of sideways action. We do one last push up. Okay, and then the news comes out tomorrow, and then we get the pullback. All right, that's what I'm thinking because it's the market. If you look at what's been going on, you see that these expectations over the past, I don't know, what is this? Over the past month, really, have just been on an upward trajectory. I mean, this almost looks like a V bottom, which the V bottom recovery is wow, that's a biggie. I mean, you don't see that very often, but the market knows about all this European debt deal. So what's going on here? You're saying to yourself, well, gosh, there is really a lot of risk in the marketplace here, but the market already knows about this. I mean, it's not like it's going to be like new surprises on them tomorrow. So what gives? So, it's you never want to fight the trend, all right? And these intermediate term trends to longer term trends are looking pretty strong here, okay? But I could see the opportunity for a spike up and a pullback, all right? I'm not saying it's going to reverse the trend and everything's going to go to hell in a handbasket, but that you just may get a better buying opportunity. So I'm hanging on for now. I'm going to wait and see. All right, we've got U.S. consumer confidence figures out a little bit later this morning, and then home prices as well. So we'll see what's happening here. But right now, the focus is on what's going on with Europe tomorrow. So these next 24 hours should be fairly volatile, especially tomorrow going into that European session when they're expected to come out with their decision. I'm wondering if I can get an exact time on that. They're talking about 10 a.m. Eastern time. So that's what we've got for today, gang. Good trading to all.